Peloton shares on a wild ride this week, down sharply this morning by about 15%. That came after the Peloton earnings call, or after Peloton came out with earnings. That call starts in less than 15 minutes, with the company reporting heavy losses, outsourcing manufacturing and delivery, and now selling some products on Amazon. Yesterday, remember, the stock was up sharply because of that Amazon news. So is this a situation where the embrace of Amazon is a wise move for direct-to-consumer company? John Ford is here to weigh in on all of this. And, this is the stock market that seems to be of two minds, too, kind of looking through these stories, John.
Yeah, what a difference a day makes. But yes, Becky, it is a smart move. At this morning's earnings show, Peloton needed to face reality. Amazon's got a giant pool of likely buyers searching for Peloton on the site and not finding any 500,000 times a month, right at the time when Peloton needs to spend less on customer acquisition and marketing. That's especially important at the moment because Peloton's in a pinch. It needs to generate cash by selling hardware quickly and efficiently with few returns if it's going to survive without laying off more employees. Amazon will generate new demand, provide its existing third-party logistics capability, and back Peloton up with customer service. And yes, I know the main concern that Amazon's going to cannibalize Peloton by selling knockoff fitness bites alongside the real thing, forcing Peloton to either lower prices or buy Amazon ads to drive sales, both of which would eat into margins. But that concern's overblown, because people are already searching for Pelotons on Amazon and not finding them, and then presumably buying something else. And while there's some risk of Peloton ceding its primacy with the customer by working with Amazon, it's a lower risk than if it were selling Allbirds. So once a customer signs up for a Peloton subscription after buying a bike, the company's going to have plenty of first-party data and access. So Peloton can make this work, Becky.
It probably will provide a demand boost in the near term, but do you really think it's going to help with Peloton's biggest issues, John?
Well, yeah, on the other hand, no. Partnering up with Amazon is not a good idea. It's a Band-Aid on an infection, and it's going to give Peloton false permission to be less urgent about the festering hardware problems. So why do I say that? Well, it's not just that Peloton built too many bikes and they're sitting in warehouses. There are quality questions. Peloton's recording charges for recalled treadmills, yes, but also for bikes that were returned in such bad shape that they can't be resold. They're scrap. Some reports suggest Peloton has built and sold bikes that have corrosion. Peloton calls these one-time items, but my experience covering hardware tells me that when you have this many quality shortcomings all at once, it's rarely a one-off. It's the equivalent of termites. From design to materials to manufacturing and quality control, Peloton probably needs to re-engineer its bikes. Otherwise, it risks either making too much product that doesn't pass quality checks, which is bad, or continuing to sell product that disappointed customers return, which is worse. Partnering with Amazon won't fix any of those things. It'll just give a powerful rival insight into just how bad Peloton's problems are, allowing Amazon to either build a Peloton killer or watch the company try to bail out of its ship with leaky buckets before swooping in and rescuing Peloton for pennies on the dollar, which wouldn't be good for shareholders.